to the Inspire Wealth podcast with Prof, where we dive into the world of real estate investing and wealth building strategies. I'm your host, Mallory Meehan. I'm a real estate professor, attorney, and seasoned investor here to guide you through the ins and outs of creating wealth through real estate. If you're looking to take your real estate knowledge to the next level, don't forget to subscribe to stay up to date with our latest episodes and offerings. Welcome to another episode of Inspire Wealth. I am your host, Prof M, aka Mallory Meehan, and today I'm joined by Frank Rizzo. Frank, welcome to the show.
Mallory, thank you so much for having me.
So, Frank, we were talking a little bit before, and so I'm really interested in the specific type of real estate asset that you're looking at because I think it's a huge need in our country. But why don't you go ahead, introduce yourself, tell us about how you kind of made this strategy and have this new career now in real estate investing.
Well, thank you, Mallory. Like most people, when they hear the word real estate or they hear about I'm in real estate, they think about it as being a real estate agent. So I did start my journey as a real estate agent. I did get my real estate license at 19. I left the business like many agents do. And then I came back, about 5 years later as an agent. But I always knew I wanted to get on the deal flow side of it. My intention was I liked putting deals together. I wanted to have a seat at the table.
Mm-hmm.
And I figured the best way to do that was to understand on how to structure and how to find and how to value deals, kind of do the things that the people who are out there working 9 to 5 or the doctors, the attorneys, the business owners who are busy doing their their attention on what they need to do to drive their income, do all that hard, that work and research and diligence that they don't have the availability to do, and find really unique opportunities to invest in. And, eventually started my own brokerage firm where we were focused on alternate investment opportunities in the New York City area, whether it was non-performing loans or distressed properties, where I kind of, built my business up on. And eventually, just in quite helping somebody relocate out of New York City, I was exposed to the manufactured housing space, or better known as trailer parks. And in making the recommendation that this is something that I think you should consider, maybe you should own a mobile home park in your portfolio. The only way they would do it is if I put my money where my mouth was and stayed in the deal with them.
Mm-hmm.
And I, quite frankly, it was the best thing that I ever did, because it completely altered and changed my perspective on real estate and real estate investing. And since that point, my partner and I have been involved in nearly 30 communities. We're in 4 states in the Southeast, primarily in Georgia, Alabama, North Carolina, South Carolina. We're vertically integrated, which means that we self-manage all the properties that we do own. And quite frankly, Mallory, we find that, not only do we think that we're in the right space, but it's the right time. I mean, affordable housing is a major, major issue that's impacting communities across the country. And I have not seen one community that hasn't been impacted by this affordable housing crisis. We just haven't built as many homes to meet demand.
Right.
And this is the most affordable housing stock that serves roughly 12% of the nation, and there's a finite supply of them. So, I mean, there's a lot of ingredients here that make this so necessary right now. And it's been a very interesting journey, to say the least, being in the manufactured housing space.
I love that. No, I think you're exactly on point. Obviously we're in a housing crisis right now. Don't have enough housing. COVID obviously stopped a lot of construction. We're not able to keep up with the demand. And, I think the affordability factor too, it's like how much properties increased in their cost from 2019 until 2025, now is just exponentially increased beyond what people are able to afford and what salaries have increased. So kudos to you for, helping that niche product. Now, Frank, how long ago did you first start investing in this particular asset?
2013 was
Okay.
our first acquisition. And then really in 2016 is where we made the decision that we're going to do a deep dive, and this is where we want to focus. our time, energy, and attention, and we started pivoting out of the New York City area and focusing in other areas and really into manufactured housing.
So when you're looking at, some of these states that you mentioned, which I think are really hot market kind of states, so you have Georgia, Alabama, North Carolina, South Carolina. When you're looking to acquire some of these parks, what are some of the things that you're looking for, that help you understand whether or not this is going to be a strong investment?
That's a great question. So, what people have to understand, this is we tell everybody it's a business of nickels and dimes, right? And where you can generate real value is on scale. So number one, if we're entering a market, we look at the size of the opportunity. For us to buy a smaller park, 8 to 12 units, just doesn't work. We're
Right.
typically our average park size is roughly 85
Oh,
lots.
wow. Okay.
Our largest park is 271.
Wow.
So we tend to look at least if we're planting a flag in a new market, we want to have some scale,
Hmm.
because to deliver professional services, you have to be able to do that. Uh, we're open to different areas. We're not worried about park owned homes. Like there's two things that you're buying when you buy a mobile home park. You're buying the land,
Hmm.
and then sometimes you're buying the homes, and sometimes the tenants own the homes.
Right.
So there's this mix that happens with another security that comes along with the purchase. We'll buy homes if need be, if that comes into the purchase, but our ultimate goal is to create a pathway for home ownership for people who live in those communities. For us, we believe we can do what we do best, which is run a top-notch community, professionally run, with people there on the ground who care, who are relentlessly looking to improve the resident experience. But we can't do that if we own all the homes. We want residents to own their homes, to have their own, pride of ownership in the community. We find that leads to less turnover, better run communities, and then we can focus on bringing in amenities, the capital improvements, the infrastructure improvements necessary to run a clean, efficient, and top rated community in the markets that we serve.
That's awesome. So you are vertically integrated, which, to your point, it makes sense. Like if you're going to have somebody who's managing an on-site property, having something that's, 10 units or fewer doesn't necessarily make the most sense. So do you have people who are living on site managing? Is that how your management structuring, or what does that piece look like? Because I feel like property management specifically is one of the biggest holdups for people when they're entering in the real estate investing asset. Like they can't comprehend how much time and energy is going to go into it. And for something like this, I feel like you really need somebody who's feet on the ground here, knows the market, knows what the tenancy is like. So what's your company's plan for that?
You must be a professor of real estate, because so it's interesting because people do underestimate that the operational intensity that owning any real estate is, right?
Yeah.
Because at the end of the day, you're buying a business that has real estate on it, and the manufactured housing space for the mobile home parks are the classic example of that. So
Hmm.
when you buy a mobile home park, you do have a property management business. You have a retailer dealer's license, which is to sell the homes. So we have three businesses, one, and we own the real estate, the underlying dirt. So for us, when I first got involved in the space, the thesis was you find a community mayor who'll just report back to you and let you know what's happening. And if people own their homes, they'll pay you, and you don't have to. It's very hands off.
Hmm.
That is the farthest thing from the case. There is an operational intensity that's necessary to maintain that community feel. So when we're on the ground, we found that having full-time employees that can manage the community professionally, make sure the reporting standards are there, making sure the culture of the community and those standards are being upheld is so important.
Hmm.
So sometimes they live on premises. It's not a necessity, but what is a necessity is that they could uphold those standards, and we could make sure that people know when they step into one of our communities, regardless of where it is, that there is a certain expectation level that we have of the resident and the resident should have of us. And I think as operators, we found, especially in a niche business like mobile home parks, there wasn't a lot of third party managers who could understand that. It's a little different
Yeah.
when in say traditional multifamily where there's a, a number of really excellent property managers. In this space, there is such a degree of learning
Yeah.
and it's such a niche space that the local managers on the ground, while they, and I'll give you a perfect example. Our first park, we actually hired a property manager. The first park my partner and Eric and I purchased together, and we had, investors who invested with us. We said, look, let's, normally I manage everything. Let's hire a property manager in town, high rated. They just didn't have mobile home park experience.
Mm-hmm.
Within 6 months, they fired us because I was on them as knowing the business. This is what I expect.
Yeah.
Let me see the showings. They weren't able to fill the park up with any new residents. And for us being on top of them, they just said, hey, look, we don't want to continue managing this. And we had to step in and run this from a distance, 800 miles away from home.
Yeah.
And we got a crash course in what it took to really run and operate and optimize a mobile home park in that manner.
Yeah. No, I understand, like, being able to manage something from 800 miles away is not the ideal situation. And, you need eyes and hands on the site, no matter what asset class, you really are. So if you got fired from your first property management company, so now you're like, we're probably going to need to internally integrate. Was it at that point that you also were contemplating or determining that you also wanted to get into the manufacturing of the homes and that piece of the sale, or was that always part of the plan when you acquired your first park?
So we don't manufacture the homes, but as a
I meant
retailer,
like, source them. And, yeah.
correct. So the idea was we believed from a development perspective, and I have done some development in New York City. From a development perspective, when residents are homeowners, there's a pride of ownership. I mean, that's one of the things as a real estate agent that you just see it, you sense it. People like to have a home to call their own.
Mhm.
So the intent was always, let's create a pathway for people to own those homes, and if we could do that, then we can focus on what we can duplicate and what we can automate, because the grass has to be cut regardless of how many people are in the park, right? The lights have to be turned on the streets regardless of how many people are and if we don't have to worry about everybody's leaky faucet, and the person who's there on the ground has a vested interest in doing that, then we could really focus on things that will drive value and make that community very marketable, bringing in amenities like playgrounds or laundry centers, picnic benches, like things that will drive people to revisit what
Mhm.
living in that community is like, and also change the narrative in those cities and towns. Because one of the important factors here, Mallory, while we've touched on affordability being an issue across the country, and this being the most affordable housing stock, many times communities will want to shut down the mobile home park in town because it's been either so poorly run or it has a stigma attached to it. And so the most affordable housing option is diminishing. And every year this country closes more mobile home parks than it opens. And it's just mind boggling that we have a solution, and cities, because of the stigma, are looking to get rid of the most affordable way for people to become homeowners.
Yeah, and that was kind of leading me into my next question, is like, how do you get past that stigma? Because I know that, if it's a new development and you're buying the land to create a new park, clearly you have to go through the local government and local zoning, and you're going to have the public that they're going to say, I don't want this in my backyard. Now, I'm not sure if this was a thought that you've had, but I feel like there's a different stigma for when we call it mobile home parks and manufactured living, or even like tiny houses. And people are okay with tiny houses in a park setting, but they're not okay with mobile home in a park setting. Does that some like do you get that kind of vibe?
You've hit the nail on the proverbial head, and it's just a name
Yeah.
that resonates with people. And again, it's the stigma that people have. But and I think this goes into the history of how these parks really were originally built,
Hmm.
because typically they were people who owned this additional land. They weren't developing the parks to be parks. It was, how do I create income off of this land? And there wasn't, most parks, not every park, there wasn't a true master plan in place. It was maybe somebody, a farmer who converted some of their land, and this year they put in 20 homes, and the next year they put another 20 homes. And by the time it passed second or third generation, they weren't true operators, but they were people who just owners who were using this as an income stream and supporting a lifestyle. And because of that, maybe because of that, you ended up having a degree of nuisance that came into those parks that were just it didn't matter. And now I think to change that narrative, there's only one way, Mallory. We went in and did the work, right? You have to show these communities like, hey, this is what we've done, right? You come in and you clean up the ugly, turnarounds. You get rid of junk homes. You make sure that there's a zero tolerance policy for nuisance or drugs or crime. You
Hmm.
you put in lights, you pave roads, you make infrastructure improvements. And now, by far and large, when you've done that and you have a book of business where you could show, it becomes an easier selling point when you come to your next community. Like, this is what we've done, this is what we're looking to do, and we want to bring this here. Look, communities realize the need. They just don't want to have the headache that sometimes is associated with some of the communities in this asset class.
Yeah, I mean, because you still have people calling them trailer parks, I'm sure. And, they're like, I don't want that trailer trash in my backyard. And, I'm sure you've heard every name in the book. And I think, you have to market it in a different way, because I think, even Section 8 housing kind of gets that bad rep of, oh, your government funding, and, you're not going to get the best quality tenants, and then that's going to bring crime, and that's going to deter the property value. So if you're going into a meeting and you're buying a new park, what's some of your strategy points that you address outside of the fact that you're going to make these capital improvements and that you're going to clean up the park when you're trying to sell this to the public?
So that's a great question, because one of we want to make sure that we understand the dynamics of the community that we're in, right?
Hmm.
We want to know, based on the park and the business plan, what's that surrounding market, what's the need for housing, right? And what numbers do we need to hit? So and what do I mean by that is, typically, we don't. I'm not necessarily worried about what the park next door is looking at. I want to see what a comparable, maybe Class C apartment might rent for, because there's always going to be that delta between what a 3-bedroom might rent for in a Class C apartment to what a 3-bedroom mobile home might go for. And I
Hmm.
have to be priced accordingly to offer that value, to have people really take a look at that community or revisit that. So that's a key understanding for us. And based on the market, we can make different assumptions, right? So we're in some markets where they're high growth. The cities are growing excessively fast. The median sale price is over $250,000. We know if we bring in brand new homes and we're selling them between 60 and 70,000, we're going to have a very good sales velocity to infill that park, which means take vacant lots and fill them with new homes.
Hmm.
Alternatively, right, if the median sale price is less, but I have homes on site, right, I could be successful there as long as I don't have to bring in new homes, right? So I have one of my most successful communities. The median sale price of a traditional 3-bedroom house is $141,000, but that community is a rock star. And it's a rock star because the lots are filled, people are there. I'm still offering affordable housing.
Hmm.
It's less than buying a house. And people like living in well-run communities. They like to know that their neighbor is, maybe 20, right next to them rather than a half a block away. And so when people who like that creates a good value proposition for us. So, we can be, as long as the business plan fits the market that we're in, we can still get us to where we need to be.
Yeah, and I think that's an important part is that you really have to understand what's happening locally in that particular market to be successful in no matter what type of real estate asset you're in. But this one, specifically true. Now, I'm curious to know, do you target specifically owner occupied homes, or do you also have homes that you maybe offer for rent? Or is it strictly a model where we're going to run this, and they're all going to be, you know,
Yeah.
owned, or, what kind of like a ratio do you typically look at?
So, I mean, we're predominantly resident owned. I mean, we do have some rentals. I mean, it's, some of it's going to be legacy, on
Mhm.
communities that you purchased over. And then every market, you'll always leave a few homes available for rentals for people who want to rent. We've just found in your traditional multifamily environment, someone rents a home or rents an apartment, there's turnover. Within 24 months, 36 months, they're looking for something new. We try to eliminate that turnover. We like when somebody finds value and they want to be there and they want to be there long term. And so if they own their home, they will stay longer. So yes, we'll leave some units available for rental, but for us, we like to know that once we get a community to being stabilized, and by that I mean 80% of the lots filled, 80, there's going to be very little turnover over time because people will be there. They'll own their home, and if the community's safe, if the community's clean, if they're still seeing a value from having their home on that dirt, they're probably not going to leave.
Yeah.
Um, so that's why we tend to like that model a little bit better.
Yeah, no, and that makes total sense. Now, when you're sourcing some of these homes, are you just the middle person, or do you sometimes offer your own financing and add that as another layer of business operations to this business model?
So we tend not to offer financing. We have third party financing relationships that will um, take that place.
Hmm.
So for as complex as the business can be, we try to keep it as simple as possible, right? So we're trying to take something that is very complex and
Yeah,
simplify it into the different lines or the different verticals inside that business. And the more complexity you can add to it, just the more challenges that can happen in the system. So we do try to keep it as simple as possible for us.
yeah, and that makes total sense. I completely get that. So, Frank, we talked a little bit before the show that you guys have done some syndications and that you've had a fund to kind of raise capital to acquire some of these newer projects. What do you think the outlook looks like in the next 12 months for your, particular business and the outlook for affordable housing in general?
Well, I don't know if you heard the headlines a few weeks ago where Brookfield was looking at doing a $10 billion acquisition of Yes Communities, which is one of the largest providers of one of the largest manufactured housing providers in the country, 18 states, 55,000 pads. It would be the single largest real estate acquisition, any asset class, in over 3 years. And that just goes to show you where institutions have taken another look at this and done a deeper dive over post COVID. That's here to stay.
Yeah.
And if that deal happens, I think you're going to see a resetting of valuations, which in general will force better management across the board. You'll probably see some compressed cap rates and valuations of these communities because there's more capital now in that space. So I think for operators, you have two choices. You're going to, you could either you're not going to out Brookfield, right? But
Right.
you could be more nimble. You could look at secondary, tertiary markets, and you could really take on situations that they're not going to want to look at. Meaning, like we tend to specialize on, we're very opportunistic. We do deep value add, turnaround projects that most uh, large institutions stay away from because they're hairy. I mean, we're
Yeah.
willing to do a lot of the work um, that they won't do, and we can clean up a 1-star or 2-star community and turn it into a 3.5, 4-star, which for us is where the value is. So we can get a little bit more creative that way, where an institution like Brookfield probably wants to take a 3.5, 4-star and turn it into a 5-star, right? So they just want to do that little, you know,
Little
little
bump.
jump.
Yeah.
So for us, and I think one of the good things about us is I like to say that I might not have any hair on my head, but all my deals have some hair on them. So
I like that.
yeah,
That's
so
good.
and I think that gives us a little niche inside the niche of being able to take on some difficult projects.
Yeah, for sure. So, how many projects are you typically acquiring each year, and what are you hoping to do, you know, in the next couple, we'll say 6 to 12 months?
So I wish there was a magic number. I mean, the last 2 years we've been very, we haven't bought as much as we would have liked, and I don't think a lot of people have. Commercial real estate deal transaction volume has been down about 60%,
Hmm.
just because the numbers didn't pencil,
Yeah.
right? And so you have to stay disciplined and not chase the market or chase the deal. So even though for us, I mean, we obviously want to acquire, but you can only make your money one time when you buy, right?
Right.
You get your money when you sell, but you only make your money one time. So we've been very disciplined. We've transacted less in the last 24 months than we had 24 months before that. But the stuff that we've acquired have been, I think, really high quality, right? So for us over the next 12 months, we see that opportunity set really opening up, and we've got some real creative um, fronts that we're working on right now and some new markets that we're looking to expand into. I do think that there's more people out there looking into the manufactured housing space. And I will tell people this, who, if you're interested, you're listening to this program and you're interested in buying a mobile home park, one thing that happens in this space more than in any other real estate asset classes, you will see deals get retraded or put back on the market multiple times. Because what happens is a lot of people think they want to own a mobile home park, take a deal, it goes in the contract, they start peeling the layers back on the onion, and they say, wait a minute, I didn't realize I have to do this, or I didn't realize I have to do that, or I didn't realize they don't really have good books and records. For us, we've gotten a comfortability with a lot of this maybe misinformation that we might get, and we realize where we could plug in the holes. So a lot of times just patience and persistence allows us to be able to execute maybe the second or third time around. So for instance, like we're going headlong on a deal right now that first came out in January, and it went through the ringer 2 or 3 times, and it finally came back to us. But we knew the other numbers weren't right, so we stayed disciplined, and now we have an opportunity to execute at a number where we're comfortable. So that's one of the things I would just remind everybody who's looking at this space to think of.
Yeah. And, Frank, like I told you earlier, like education is like my biggest thing. Like, I think before anybody pulls the trigger on any sort of investment, they need to educate themselves. And so, one of the tools that you're basically doing is they can find you and follow you and really understand more about the mobile home, manufacturing, living kind of asset class. And where would they go to find out more information specifically about what you're up to?
So we have a video series, which is basically a video documentary series called on YouTube called Trailer Park Turnaround. So they could go there to Trailer Park Turnaround on YouTube, or they could go to trailerparkturnaround.com, and they will be able to watch some of what it takes to really turn around a mobile home park, and they could join our list, and they'll get news and information updates of what's going on site, and different opportunity sets that we see in the marketplace.
Yeah, because I think that, it's important to really understand what you're getting yourself into. And, I always say that real estate is a team sport and that you need to find the right people to be on your team before you're going to be successful. And so partnering with someone who has done it, who has been there, I think is one of the best ways. So anybody who's out there listening, who's thinking that the manufacturing home, affordable living is where they want to go, I would highly suggest reaching out to Frank and checking out their videos. But Frank, any last final pieces of wisdom that you can provide for our listeners, whether it be about your particular asset or real estate investing in general? What kind of nugget do you want to leave us with?
So that's a great question, Mallory. I would say my real estate career really took off um, when I found a and I had a couple of really good mentors that I could go to and ask questions and work deals through and different opportunities, and that really helped because there's a lot of different places to get information from, but it was having uh, a mentor who I could run some of these ideas and deals through, and all that information I was getting. It's okay, you know, what do I need to do and how do I start to execute, and then being able to take action. So if you can find yourself a mentor or mentors who could you can network with, that really will accelerate your growth faster because and look for people who are where you want to be, who have made mistakes, right? Because you're going to make mistakes, but don't let that fear of making the mistake stop you from making a decision,
Right.
and see where you can get that information from. But having a mentor is so critical, I think, to having success. And so that's one nugget that I would definitely suggest anyone out there listening um, to definitely take a look at.
Yeah, couldn't agree more. Well, Frank, thank you again so much for sharing your insights on affordable housing and the transition of manufacturing homes. For anybody who, again, is interested in learning more about manufactured homes, reach out to Frank. If anybody is interested in just learning real estate in general, there is our website where you can go to take our online course, inspirewealtheducation.com. And with that, Frank, it was great talking to you, and
Great.
we'll be in touch.
Thank you very much, Mallory. Great talking with you as well.
All right. Prof, I'm out. And for those who want a more hands-on learning experience, check out our online courses at inspirewealtheducation.com. Whether you're just starting out or looking to expand your investment portfolio, I've created step-by-step guides and resources to help you achieve your financial goals. So hit that subscribe button and let's start building your wealth one episode at a time.